Right now, the probability is back to two cuts at some point this year, but very low probability readings that we're getting. Again, the Fed is expected to pause, 99.5% chance that the Fed is going to pause, and then possibly one rate cut beginning in either June, July, or September right here. And again, all of those are below 50% probability. And then now it's back up. It was expected that we were just going to get one cut all through 2025, 2026, and now expected two. And again, here, and then another possibly later in 2026. Now, again, this anticipation of a cut, which right now at the moment is June, it was July, and then previously, again, it was one cut on the table for 2025 or 2026. Again, all of this is going to change because we're about to move into recession. The recession that the Fed continues to tell us is not going to happen. Now, we have reliable recession indicators. I've been reviewing some for you that are telling us, no, are going to have a recession. I believe the recession indicators over the Fed and the elites, the so-called experts that continue to tell us that we're not going to have one. And then the folks on social media continue to repeat whatever these experts say on the financial channels, which again, we're going to have this soft landing, which again, if you watch my last weekend's video, I went through and I showed you this soft landing stuff is just a total myth. These within these larger cycles, and I talked about that. Go back and watch that video. I'll talk more about recession indicators, get more data on that. But again, just know, it's telling us from the June meeting from the September meeting to the September meeting, they went from 4 cuts down to 2, downsizing the amount of cuts they're penciling in for 2025. Again, they're going to end up cutting a lot in 2025 because the recession will happen and they will be blindsided by it. And so they're like a drunk driver driving in a car. They're going to overreact, and they're going to overreact with jumbo cuts. That's what they always do. In 2001, they did it in 2008, blindsided by both of those recessions, telling us they weren't going to happen when they did. They told us inflation is transitory. It rose from 4% to 7% by the end of 2021, up into 9% in early 2022. And finally, they decided, oh, maybe it's not transitory, and they overreact with jumbo hikes. They started off very, very slow. And again, they told us there was no housing bubble back in 2006 and 2007. The Fed has a history of being blindsided. It's happening. Now, why do I think we'll get a hawkish Fed? Let me just say this. Now, my guess is we probably get a hawkish Fed because they're so concerned about inflation right now. And with all the recent news about the tariffs, Powell will probably be asked about the tariffs in the press conference. Now, the 10-year yield climbed back up a little bit today, up about 0.5%. We're going to be watching. Again, there's still risk of it going back up and forming a double top over here, but I told you I think it isn't going to go much higher than that. It might have peaked right here at the resistance zone at the trend line. And if it does start to go lower eventually here over time, eventually the S&P will join it. Now, right now, we have a negative correlation at the moment, and if we see this try to go back up, we could see the S&P turn back down and get another push down. But if we get a hawkish Fed, we'll be watching to see what this does. And again, the 10-year yield, the bond market, getting more inflation, and that's causing the Fed to second guess themselves on their newly rate-cutting campaign there. It'll be interesting to see if the Dow makes a new high this week or not. S&P's pulled back and the Dow is shrugging it off, continuing. It's almost near the highs. And again, if we continue, you got this upper channel line. Dow and the Russell that really tipped us off to the December top. The Dow with that divergence and coming very, very oversold. And the bullish divergence as it formed down here tipped us off to the bottom. That's why I expected that rally. Predicted that rally on the 9th and 10th that we would get the following week, and we ended up bottoming the very next day on the 13th. Expected a rally with the inflation data and the bank earnings the following week, and we did get the bottom of the rally I was looking for ahead of the inauguration day. Ahead of it, and I was looking for that. We have a continuation of the election rally that we had back in November, the big rally that we had there at the November lows there. Watch to see if the Dow makes a new high, but also does it end up making a new high and diverging and getting a Dow theory sell signal with the transports. Interesting. What happens at tops? Now the transports in the lower window, the Dow's in the upper window, and again back at the 2022 top for the Dow, it diverged with the transports, and now it's forming this larger divergence right here with the transports. The Dow's made new highs above the 2022 peak. The transports has not. Do we get another divergence right here like we had back over here? I'm watching for the same thing between the Russell and the S&P 500 because they did diverge and did the exact same thing back over here. The NASDAQ also diverged with the S&P at the 2022 top, and sometimes they do, sometimes they don't. But it's worth paying attention to if we get a Dow theory sell signal where the transports doesn't make new highs and the Dow does because of the principle of confirmation, one of the tenets of Dow theory, well, then that would be a very interesting signal indeed. Something worth paying attention to. Now, if the transports and Dow both make new highs, they confirm one another, they don't have to have a Dow theory signal right here now, but they very well could form it. So again, just something worth paying attention to between the Dow and the transports. If the Dow does make new highs this week or next week, possibly surrounding earnings, we'll see. Whether you disagree with me or agree with me that tariffs are inflationary doesn't matter. Powell believes that. That's what matters. That's the point I'm trying to make. And again, because Powell believes that myth, which I believe is a myth, is being very hawkish. You know, that the economy is going to overheat. Economic growth is going to lead to inflation. Tariffs are going to lead to inflation. All the stuff that Powell believes and the folks over there at the Fed. And again, it doesn't matter what you and I think. Whether you believe it's inflationary or not, Powell thinks it's inflationary, and that's why the Fed's going to be hawkish, and that's why I think we're going to get a hawkish Fed tomorrow. That's all. Now, we're also going to get earnings after the Fed. We're going to get the Magnificent Seven earnings. We're going to get Tesla. We're going to get Meta. We're going to get Microsoft. We're also going to get IBM. The following day, we're going to get Apple. We've got more important earnings coming next week. Now, the VIX predicted we were going to have an up day that will give us a bounce or a bottom. My guess is it's probably a bounce. The VIX predicted that yesterday. 95% chance we were going to have an up day in the next 2 days. The VIX was correct. We did have an up day on the S&P 500. Now the Dow continues to rally. We're approaching new all-time highs. We're still not there, but approaching that. Probably going to form a divergence with the transports, but the Dow was up 137 points, rounding up 0.31%. The S&P was up nearly 1%, 0.92%, up 55.5 points, up again, holding above that 6,000 area, and at 6,067. NASDAQ up 2%. NVIDIA getting a big rebound off the 200 period moving average. NASDAQ up 2%. The Russell was up 0.21%, but the VIX was down 8.32%. The VIX dropping. Remember, we got that topping tail yesterday on the VIX, and the VIX was up, though, more than 20% yesterday. Even though we got the topping tail, the VIX was predicting that we would have an up day, a bouncer bottom today. And again, the VIX was correct. Again, that's based on historical data. Moves greater than 20% up or down the VIX, it was correct. Trying to day trade moves on the VIX, I just use it to try to determine possible areas where we might get bottoms or bounces or peaks and tops. Pullbacks. The VIX, pretty good signal. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. It takes a lot of time and effort to do this. Again, this is just stuff I look at day in and day out, and throughout the week I look at these different charts and I'm sharing them with you. But I need to hear from you in order to make that work. If you like this information, please take a moment to follow the link below and support the channel. Most YouTube channels go the sponsor route to make money for their channel doing what they do. I don't choose to do that because I don't want to sell you stuff. Those people contact me constantly, and I just turn it all down. Don't want anything to do with it because I don't want to sell you stuff. But I need to hear from you in order to make it work. Can you take a moment and partner with me and just follow the link below and do what you can to help out? If you could do that, I thank you. Now, again, signals have made some pretty amazing calls. And again, warned you about this bullish divergence ahead of the election. And I told you we were going to get an election rally. That's what that was telling us. And again, beautiful signal. And this was that key support. I warned you about this divergence after the election rally and the Fed, that we were going to get a pullback. Warned you about that. Warned you about gap support being tested at our 200 period moving average, and that we were likely going to resume the advance. We did. Here at the December high, I warned you about the rising wedge and this bearish divergence that formed over here. And again, larger divergence with the peak over here. We had the same thing on the MACD. Played out. We corrected sideways. We saw the Russell and the Dow get a very, very sharp decline. That was when the Dow peaked on December 4th. The S&P a couple of days later, and again, called that top correctly. Formed a triangle, and I told you if the sell-off was going to be more shallow on the Dow and the Russell, then we would get an upward resolution with the triangle here on the S&P. If we were going to get a bigger one, we would see a downward resolution. We can attempt to go back and eventually fill this gap. Hawkish Fed, downsizing the amount of cuts they were penciling in, and we had a downward resolution to the triangle. The signals remained bearish, continued, and then we got a bearish reversal of conditions with that breakdown as well, with momentum. We dropped below the 200 period, the 50 dropped below it. Talked about these bullish divergences that formed with the sell-off. Talked about this one at gap support. We got a bounce here. Again, talked about when we rallied up. Look at the bullish divergence. We rallied up. We formed the bearish divergence, and I talked about a back test of the triangle. We also back tested the broken trend line of the rising wedge in the daily time frame. I talked about that. That played out correctly. Talked about the bullish divergence that formed right here. Talked about a bounce, going back and testing the 200 period moving average. We did. And divergence played out again, forming a multiple point divergence. We halted at the trend line. I told you the head and shoulders that everybody was telling us we were getting the head and shoulders. I talked about it. I explained it, but I told you I thought it was a fake pattern. The head and shoulders that I thought was forming, I thought was a fake out. And that with the turning right here, that this was going to evolve into a bull flag pattern. I talked about coming back and filling the gap here, 57.83, the presidential election rally gap, and bottoming. And then on the 9th and 10th, before we got down here, I told you on the 9th and 10th of January that we were likely going to get a bottom ahead of the week ahead of Inauguration Day, and try to bottom out and probably see a continuation election rally that we got over here. And I think that is the case. I think we have a continuation of the election rally. 9th and 10th, I predicted we were going to bottom. We bottomed, filling the gap over here, and I told you we were going to hit that trend line. We hit it, the trend line, we hit the gap fill the following day after the 10th, on Monday the 13th, and we bottomed out. We had the rally and the pullback with the PCE data, and then we got another gap with the CPI inflation data. Oops, wrong one. We got a rally with a gap higher with the CPI inflation data, and then we had the breakout of the bull flag ahead of Inauguration Day. I told you I thought that would be a continuation of the election rally that we had. So got the bottom here, predicted the rally, the breakout of the pattern. Again, we're going to either get a lower high and turn, or we are going to get a higher high and turn and come back and back test. And that's where we're at right now. We got the higher high. I told you to be watching to see if a divergence develops. If we just got an extreme and turned down, we ended up getting the divergence. I marked a 5-leg count right here for our first subwave. I think we have our second subwave now. And again, this is playing out as exactly expected. Now, I think that we likely have a wave A down here. And again, notice as we get the sell-off, look what happened. We had the 50 get back above the 200. So I think this is bullish, but I still think we're going to get a back test here. We didn't quite reach it. We came close, but no cigar. Back tested the bull flag. I think we will reach that level and come back and probably fill the gap at 59.38. I think that you likely have an A, B, C move. And B, listen carefully. Are you listening? B may not be done yet. Okay. But again, we could see a hawkish Fed and a Fed sell-off that gives us wave C, even surrounding earnings. But I think that earnings could give us a bounce. If you get a hawkish Fed sell-off, maybe the earnings give us some kind of rebound and a bottom and a successful backtest. But I'm watching 59.38. That is the gap fill of the breakout that we had the day before Inauguration Day of our bull flag. So I'm looking for an ABC move, and I think that will complete our subwave 2 right here. And we've got our gap fill here at 59.38. Below that, we have our 61.8 Fibonacci at 59.09. So again, do we see, a move coming back here and reaching this level with the Fed or earnings this week, or maybe just the Fed and we bounce with earnings? So depends what happens here. But I think that we are probably not done with the pullback. I could be wrong on that. Elliott wave is speculation, but it could form a bullish divergence right here on the RSI. Okay, it could happen. We don't have to form a bullish divergence again, but oftentimes you do. Over here, we got confirmation of a higher low. We just reached extremes and we got a higher low and we went on our way and got that rising wedge. Other times we form bullish divergences and bearish divergences. Here we just reached an extreme. So again, be watching if we get a bullish divergence. We very well could if we get another push down. So do we have an ABC structure here that comes back towards filling the back test here, going a little bit lower than this level here, and maybe completing an ABC move for a wave 2, or you got gap support a little bit lower down here, right there, a little bit lower than the gap fill down there, and just beyond our 61.8 Fibonacci. You have the gap down here. I don't know that we go that low, but again, I am watching to see if we back test successfully the bull flag. I think you're going to. I think we fell just shy of it here. I think we'll likely still do that. But the bullish 50 above the 200 tells me that, hey, even if we get a bigger pullback, that this is likely going to give us a higher low. And that's what I've been predicting, that we get a higher low for wave 2. Just as I told you over here, eventually we're going to pull back. We are now pulling back. Eventually, as we sell off, we're going to resume the rally and go above this level, because I don't think that we peaked yet. So what I think's going on here, could I be wrong about that? Again, we have speculation. I'm just telling you exactly what I think. I have the guts to tell you what I think. It could be, again, we just had a pullback right here, more mild pullback. It's done. My guess is it's not, but I'm telling you what I think and what I'm watching for. So if we come back in here, I think buyers are going to be in this area here, in this 59.09 to 59.38 area. I think buyers are going to come back in. And I drew this this line right here rolling over and coming down into this area, because before all this selling happened, because that's what I thought would happen. As far as playing out, just because I got some of these other divergences right, doesn't mean I'm going to be necessarily right here, but I have the guts to tell you what I think. And again, the other possibility is that we've bottomed out and we're going to try to go higher. Others that are telling us, no, we've topped and we're about to go down and go to new lows, and the deep seek sell-off is now marking that everything is over. And I don't think so. I think that NVIDIA is probably going to try to go back and fill that gap, or go lower and then do it later. My guess is the S&P is not done yet. We got that beautiful topping tail on the VIX. And again, if the VIX drops back to fill the gap here, it can recover immediately on the S&P, or if it, dances around this area above the 50 period a little bit more and then goes back later, we can get another pullback on the S&P 500 and then try to bottom out. But I do think that the S&P will have a successful backtest of the bull flag pattern, and my guess is it's probably not done yet. If it is done already, then again, we'll be watching to see if we can resume the advance and go to new highs. Regardless, I was looking for a pullback. I think there's probably more work to be done. And here's the bull flag in the daily time frame. Everybody was saying that this is a head and shoulders. I told you I thought it was an ABC structure for wave 4, minor wave 4. And I told you I thought we would bounce after filling the gap, and we bounced off that major trend line on the weekly chart we did. This wave count right here, and again, it's speculation, but for a minor wave 5, and this one would take us up to a parallel channel right here. Know that we get that high, because again, I'm becoming more and more convinced that the rising wedge, upper boundary of the rising wedge, this red line right here, is where we might stall out. But this count takes us higher, as you can see, and form a channel. Now here's a rising wedge right here, and this goes back to the 2023 low. I told you we'd bounce off this level. I was telling you we we're going to fill the gap and bounce off this level. We did, because we turned off the trend line right here for the July peak. Okay, and I think we're headed back up to that trend line, forming this massive rising wedge into a larger channel in the weekly time frame, as I've talked about. Now, again, I remain bullish. Whether we get a bigger pullback, doesn't matter. I remain bullish, but I again, I'm telling you what I think, but I remain bullish. If it's done, then we could begin the wave 3. This would drag it out a little bit longer if we pull back a little bit more than that, or we could even see it happen a little bit faster. So again, we'll see what happens, but continue to believe that we're in this wave 5. I think that this was wave 4, primary wave 4. I think we have these 5 waves here going into forming this rising wedge, these 5 minor waves, which are that are going to form intermediate wave 5, primary, the 5 intermediate waves, and complete the primary wave 5. Goes all the way back to the 2022 low not seen on this chart. That's what I think is happening. And again, whether the pullback is done or not, we'll see. My guess is it's not, but I could be wrong about that. Wanted to show you the MACD. Again, I think the MACD will eventually form a larger divergence here with the July peak over here. And again, we may even get a divergence in the more recent price action, but I think it's going to come up here and form a divergence. And I think that, again, we're going to be getting that completing when we're hitting this trend line. But I always show you, again, that other trend line. Well, I think this trend line is more likely to be the area where prices stall out. I show you that other channel as well. And again, here's the larger channel. Here's the rising wedge in the larger channel right here. And again, this is what I think is going on. And again, we're forming the multiple point divergences. I think that it's not done yet. I think we get the final push up into the upper channel. I think Bitcoin's doing the exact same thing as the S&P. They're both forming the bull flags. It's pretty remarkable looking at what they're both doing. They're both back testing the bull flags right now, or attempting to. Then I think they'll both resume the advance. The time is short, but I still think we have more time. And then I think that once we reach up in this area, I think it's going to be followed by a very quick 20% drop over the next month or 2 or 3. I think it'll happen. That is when the Fed is going to panic. Now, I told you I don't know if the Nasdaq's going to make new highs because we got this topping tail in the monthly time frame. Right now, you got a spinning top. The month isn't closed out yet, but it will this before the week ends here. This candle to mean something, we have to close below it and get a follow through. But again, I'll be watching it. Again, I am not certain, and again, I want to make it clear, I'm not certain if Nasdaq's going to go make new highs or not. I've talked about how sometimes it diverges with the S&P, and maybe the deep seek sell-off. And we had that largest crash on NVIDIA, largest crash in history, one-day crash. You know, it ended up dropping over 18%. It closed 17% lower. With others, it was the largest drop in market cap in one-day history. That was absolutely incredible, and we'll be watching NVIDIA. But I've talked about NVIDIA again in this 200 period moving average. Again, I've talked about NVIDIA forming a top. And again, we hit this trend line right on the nose again on January 7th, and we turned down off of this trend line, excluding the shadow right here. That was the earnings. We got the sell-off with earnings, and then we got down back up the bear flag right at that trend line of resistance, excluding the shadow, and now we've turned down about 24.5%. We're rebounding with today's low. We're attempting to rebound, and again, I'll be watching this gap. Do we fill this gap? Or do we end up going lower? Because there is a possibility we have this head and shoulders pattern where you've got a left shoulder here with the June peak, and then you've got the head here with the earnings there in November, and we end up coming all the way down here and then get a rebound and fill this gap later. I don't know which way it plays out, but I talked about NVIDIA at great length of detail. If you want to see the longer term charts yesterday, I featured those charts. I'm going to take a look at that. But today we were up big time, the NASDAQ. After closing 17% lower, we were up nearly 9% higher, just under 9% higher today, and that's after dipping lower. So again, a lot of interest, I told you, will be around this 200 period moving average. If you close below the 200 and stay below it, we closed yesterday below it, but if you stay below it, that's bearish. You can't get back above it. Right now, we're getting back above it, so we're going to be watching. There might be more work to be done around the 200 period moving average, but if we can try to claw our way back up, we'll be watching the gap fill up here because, again, it'll allow the S&P to go make new highs. Whether the NASDAQ or not, I don't know. NASDAQ diverges with the S&P quite a bit, so I don't know. And that topping tail in the monthly time frame is disturbing that, again, could NASDAQ have already peaked, possibly there in December? We'll be watching to see if NVIDIA tries to claw its way back up, or do we have to go down to much lower levels? Do we have to come down here to the August low and maybe try to form a head and shoulders before we come back up and maybe get a right shoulder to fill that gap? We'll be watching to see how it unfolds with NVIDIA and likely influence the NASDAQ 100 greatly. The two scenarios. One is that we drop below the 200 and start staying below it. The other is that we stay above it and we claw our way back higher. Possible bullish diversions forming on the MACD. We'll be watching to see how this unfolds. NVIDIA broke major with breaking the trend line I talked about yesterday. So again, I think it's warning we're moving towards a bear market now, stock market with AI stocks and with NVIDIA now itself. Now, I have drawn this channel with the NASDAQ, and if the NASDAQ breaks this level, we could still go back and fill the presidential election gap right here at 20,227. The Dow did it, the S&P did it. We never did do it on the NASDAQ. So again, NASDAQ stops making new highs, and we end up getting a bigger sell-off with NVIDIA. Tech stocks, again, it could be that we go back here. Now, again, watching what happens with the Fed, but then I'll be watching what happens with those earnings. We're getting a lot of important earnings this week and next week. Do we try to find a bottom this week on the NASDAQ as well? And if so, can it make new highs? We do have this gap here on the NASDAQ. We still have a gap way up here that we have not filled with our bearish Harami pattern. That was the day the Fed meeting where we had the Fed sell-off of the entire market on the Fed downgrading the amount of rate cuts. So again, we'll be watching to see what happens. We did backtest this trend line. The blue is a channel, had a bull flag. We've moved back into the trading range of it. The S&P has not. So we'll be watching to see how this unfolds. If we end up breaking the trend line, I'll be watching the gap fill. NASDAQ's just kind of hop, skipping, and jumping around here. We'll be watching to see if it can make new highs or not. The gap to be watching now on the NASDAQ with our gap lower from yesterday. Start the week off. See how we close out on that monthly chart as well. 60-minute chart, you can see right here, again, the 50 getting back above the 200. So again, do we try to find a bottom or do we go lower? We have another gap right here above that presidential election rally gap that we had. We have another gap right here just below the 20,800 area. So again, do we see something where we throw back into that and then try to recover? And again, like in 2021, late 2021, early 2022, NASDAQ stopped making new highs in November of 2021 and it went sideways. Kind of what it's doing right now, at least so far. Get a repeat performance of that. And that's why I always say, watch those divergences between the NASDAQ. At the November low with the election rally, NASDAQ got a higher low, the S&P formed a divergence. With our recent January high, NASDAQ got a lower high, S&P made a higher high. They diverged from one another a lot. These bullish divergences took us off to the rally here, but again, I expected a pullback. Now I'm going to be watching what happens with NASDAQ. Does it end up the bigger sell-off or coming back and trying to fill these gaps? If we even get a bigger sell-off, though, again, we still may see our mid-January low, our lows from the 13th there, we may see those lows hold. We'll be watching the NASDAQ carefully with the Fed and with the earnings. If we get good earnings, do they take the NASDAQ to new highs? We'll be watching. The possibility here also of a divergence developing if we get another leg down, or if we can recover with this, then we'll be looking at the gap fill and this previous high right here from a few days ago.